Hi folks, welcome to this video. This is Wall Street Fanatic channel, and today we are going to be talking about synthetic indices price action. Now, there are a lot of fallacies out there about how synthetic indices should be traded, but the fact is, if you have thorough understanding of price, you will know synthetic indices deliver price closely as price delivers in every other asset, be it Bitcoin, um, Forex pairs, or possibly stocks. Now, there are some fundamental things we know about price. There are some fundamental things we know about price. For example, the trends and market structure. In synthetic indices, in cryptocurrency trading, in forex trading, all of these have very similar implications. So now, for example, you all know the theory of your bullish trend and how it is supposed to trade. Now, the theory of your bullish trend says in a bullish market, your price is going to create higher highs and higher lows. Simply means when your market is bullish, it is going to violate highs and protect lows. Now, your bullish market is not supposed to create a lower low. Now, once this occurs, what has happened in the market? It has changed structure, and it is possible the market will continue being bearish. Now, if your market refuses to break out of a range, what do you call that? Consolidation or a range bound market. Range bound market, bearish market, and your bullish market. Now, this is key to analyzing price action in every market, be it in stocks, in forex or cryptocurrencies, synthetic indices. What I just drew about the structures is a very big key component in you analyzing your market. Now, where people get it wrong most of the time is instead of they focus on transactions, understanding how business is being run, they focus on who draw the better lines on charts. I'm not saying lines will not work on your charts. I'm not saying that lines will not work. I am not disposing what you know about price channels, about trend lines, about moving averages. I even teach strategies around all of these things. But what is most important to analyzing price action? Today, I'm focused on synthetic indices price action, and what I have here on my screen is crash 1000. Now let us see if this does not follow the fundamental principle of trends. Now this is crash 1000. I don't want to refer back to a very historic market, so I'm going to just use this market on my screen. We are going to mark out every area of highs and lows starting from here. Now we have this zone here. You will agree with me that this zone is a consolidating structure. If you do not agree, please go to the comment section and type what structure you think you see here. Now, outside this structure, which structure is this? Take a while, pause the video and try to understand which structure you see here. Go to the comment box and comment what you see, and I'm going to try as much as possible to get back to you. Now look at this structure. Which one do you see? Do the same thing. Leave a comment in the comment section. I'll get back to you elaborating on this. Now I'm going to switch my chart. I just switched it to line chart. This is line chart. So what do you see here? This is market creating similar highs and similar lows, and from this point onwards you see markets creating lows, higher lows, and to this point a lower low. to this point, a lower low, so on and so forth. So this structure, if you did post your video and commented this as a bullish structure, you are right. This as a bearish structure, you are right. This as a consolidation, you also are right. But our focus is not to be right. Our focus is to understand price movements and the intention of the big players through what we see from our charts. Now take a look at this. You already know that your bullish structure is not supposed to create lower lows, but it's supposed to create higher lows and higher highs. Now look at this section. Look at this section. What do you see? A high, a low, a higher high, a higher low, higher high, and then this point, what do you see here? From this point, what is here is a lower low. Now I'm going to delete everything on my screen and focus your attention on this particular point. Now what do you see here, and what is the intention of the big players in this market? What do you think they are trying to do? Now let us measure the range of the highest volume of activities in this particular price section. So this is the high. The candle body is the area of the highest volume, so even without looking at my volume, I probably will estimate something close to the information volume will give to me. Now I just measured this range to the upper part. Take a look at this. This is 111.6. Now let me drag again from this point back to the lowest point of the bearishness, 128. Now without fixing lines on my chart or indicators, let us refer to basic law of economics. When supply is higher than demand, it will lead to decrease in price. Now, where is evidence of demand in this chart? Here. Where was the supply created to this requested demand? Here. And what is happening to price? It became bearish. Now why? This is the big players footprint. Look at this. So let's say somebody requested for 111.6 barrels of oil, and on the supply they brought 128. So this is what is needed. This is what was presented. So there are excesses. So if you want to sell the excess, you have to reduce the price of the overall fuel so it can tally to this demand. Now this supply exceeds this demand, so it means price is going to go down, because the basic law of economics says increase in supply will lead to decrease in price. Now without fixing multiple lines here, can you see this, guys? A very simple method of price analysis. Now take notes, there were no trend lines, no this, no doubt. This is just me following my structure and measuring areas of activities. Now I'll take this out and look at this reaction here, guys. What do you know as your bearish trend? Your bearish trend is a trend that creates highs and lower lows. Now look at this, guys. After this high, it came back to violate this low. So if I am starting from here, this my low, this my high, this a low, this a high, this a low, from this range created a high, and then this. Now drag this line out. Is this not very similar to what you see as your classic bearish trend in textbooks? Yes, so why do you not see this? Why are you seeking for a holy grail strategy, a 100% win rate strategy? by fixing lines everywhere. Now let's do a quick exercise and see something here. So let's assume from this point to this point is the current market, and then you fix uh, a trend line. Let me use this section. Yeah, so this is more accurate. I'm trying to drive a point here. Now let's say somebody saw this setup. Market was like this. So market was like this. So we've not seen the future part. And then someone saw this setup, price coming down, and then fixed a trend line like this. And then saw this bullish candle as a rejection candle. Now, according to the theories, you are going to take a long position and put your stop loss below previous low or below the rejection candle. Fast forward, what did price do? Just came back to attack where the possible stop loss is supposed to be before trading back up to break even, and then continuation to the downside. Now, you can't tell me everybody trading trend line is too dull or they are not following the principles correctly. There are so many people out there reading more and more of how trend lines work, trying to improve their strategies, their analysis, studying candle, rejection candle, types of candlestick, but they are blind toward understanding what all of this means on their chart. Now, your consistency and your profitability will likely depend on you understanding the market. And if you have been trading for a while with all of these principles, you will discover that you've seen some certain things maybe you cannot even explain that makes you to be profitable. There are some certain things you know by heart that you see them on the chart and you feel like, okay, this market is going to buy or going to sell, but you cannot explain it. So your profitability uh, developed from experience. Yes, that one did happen from experience. But real success in this market is going to come from you understanding the motives of what you see on your chart. Now look at this, guys. With the use of trend line, you are trading against the major and current market structure. Now, if you are trading trend line, you are right if you draw it like this. But now take a look at this, guys. Look at this low, which was violated. Why are you going to trade against the current market structure if it was not for trend line? Now, the lessons have always been the trend is your friend, trade with the trend. But these strategies are actually teaching you and fine-tuning you to trading against the market. Now look at this, guys. This was previous low and now this is the next low, which is a lower low. But according to the trend line strategy or whatever, you are going to trade against the major market structure. So if you have your analysis like this, you are supposed to actually trade like this instead of you trade like this because you already had a lower low here. Now pause this video and go to your chart and start to analyze your market, be it your boom, crash, synthetic indices, your crypto, and the rest, and see how you can be able to identify the intentions of the big players by following just the market structure. Now I'm going to illustrate this with a trend. So let's say price is a trend moving in a real way that is like this. Now you cannot tell me that this trend is going to continue moving like this to this direction because you drew a line and this line is supposed to predict the direction of the trend. No, it is going to follow the path of the real way. That is exactly what your market structure does. Price is likely going to follow the path of the market structure. Now you all attended schools, different schools, you might have learned a bit about economics, this or that. Applying those basic rules to this market, they do work. These are markets All of these charts are representation of transactions, guys. So we are talking about real-time business. A lot of you guys have businesses. So why do you think your business will be determined, the reaction of prices and customers, how they are going to transact will be determined by a line you draw on information you stored about your business. You can plot graphs on your businesses. You can represent price movement on your businesses with candlesticks. So why do you think price is going to react just because of lines? These lines, they do work, but what I want you guys to do is to understand the intention of market direction using the pure market price action itself, guys. And one way you can do that is by learning, and this channel is built for just that. You can learn more of how to understand the market. For you to encourage me to keep teaching you guys how to understand this, you have to subscribe to this channel, like this video, leave a positive comment, go to Telegram, search for Wall Street Fanatic, join our community, and be of good decorum when you do. Go into your chart, start looking at the market and start understanding the market moves using the pure and classic theories of the market structure, other than you fixing lines on every part of your chart. Look at this chart right now. There are no indicators, nothing. Yes, indicators are also good. They are mathematical representation of price itself. So if you know what you want to calculate, you can use a specific indicator to look at what you want to look at. Again, you can decide to turn it off. Like you can see from my screen right now, I have two indicators, three. I do use RSI, I do use moving averages and ATR and a lot more just to calculate certain values. But my core decision lies on me looking at the price and studying it and trying to understand what is the current intention of the big players in the game. So you too go on and do the same thing, and while you learn, if you have any question, you can go and ask me in the community or leave it as a question in the comment section of this video. So I wish you good trading. Keep learning, keep improving, learn it, then earn it. Till the next video, goodbye.